What's up, YouTube? Thank you all for tuning in once again today. This is Forexia Pro coming at you again, Forex Investors Alliance, trading high impact news events. Now, today's video is all about high impact news events and how you can predict how the market is going to react based on the structure before the news event even happens. So last night we had a high impact news event on the JPY pairs, on the Japanese yen, across all the JPY pairs. There was a beautiful setup on this during this high impact news event. So the event was at 1:30 in the morning my time. Not sure what time it was for you guys, but if you check out forexfactory.com, you can go to the calendar and it'll list all the news events. I have it filtered out to show only high impact news events because that's really the only one I'm interested in. All the other ones really are very small movements in the market for me, at least. I really don't care to trade them as much as I do care to trade these high impact events, because a lot of times they are predictable due to how the structure of the market plays out. So at 1:30 a.m. we had the BOJ press conference on the JPY pairs. Now before this, we actually had 3 hours before this another outlook report for the BOJ and a monetary policy. I really don't care about any of this, and I don't care about the details of it, and I don't care about the forecast or the previous or the actual when it comes out. I don't even look at Forex Factory when the news comes out. I know there's millions and millions of traders that are refreshing this page on Forex Factory at the same time that the news events like this are coming out, because they want to know the actual so that they can trade it based off of the forecasted, which is complete BS, because all you need to trade these events are the market structure, is the market structure. Everything else is propaganda, basically. Okay, so let me show you guys this example of CADJPY. First of all, some of the steps in trading the news, trading high impact news events like this. Go with the trend. Okay, the trend is your friend. Now, what I had done here was drawn out the CADJPY as I saw fit. The trend line, it looked like it was in a downtrend on the 15-minute chart, and also looked like a downtrend on the 4-hour chart. So this was nearing market close. Market close was about right around here, and so I knew the market was going to consolidate and then possibly spike up to the high of the previous day, which would have been the high of the day at this time. This is what actually happened. So the market did consolidate. So the session changeover happened. We have a new day. That blue tracer here is the session changeover. There was that consolidation, and then this news event actually induced, these two red news events induced traders to go short Let me show you guys here. So we had the consolidation, then we had that news event. That news event happened right here, inducing lots of traders to go short. lots of retail traders went short based off of just these two candlesticks being as large as they are. Because for the past 4 hours, actually, for the past 9 hours, the entire market, all the JPY pairs were in consolidation for basically about 8 to 9 hours. JPY, GBP, JPY, 7-8 hours in consolidation. These retail traders are just waiting to get in on that breakout. You see the breakout of this right here. Retail traders were rushing to get in that sell. What happens during the next news event? The news event at 1:30, which is right before London session starts, creates our finishing structure here that we talk about all the time, the whipsaw structure. So this news event at 1:30 a.m., 30 minutes before London session starts, actually induced retail traders long after hitting the stops of all the retail traders that sold here. So all the retail that sold this breakout and had their stop losses above the high of the day here, or even above the high of the previous day here. Why is that? Even though we barely went above the high, the spread during this news event was, I guarantee, at least 5 pips. At least 5 pips on every broker. And that's a moderately small spread for a high impact news event. It was probably at least 10 pips. I would say in between 8 to 15 pips would probably be the spread, hitting all the stop losses up in here right before that reversal happens. So it's all a mind game, you guys. They consolidate the market for hours upon hours. This also blocks up all the indicators that use averages, that are based off of averages, because the market moves on average maybe 4 or 5 hours, very volatile like. So for example here, it took the market 4 hours to move about 80 pips, but yet the rest of the day it stayed in consolidation. Any indicators based off of averages are you can automatically throw them in the trash, because the market stayed in consolidation for 90% of the day. The other 10% of the day, it moved. Sure, it did move. It moved 80 pips or so. But yet, it stayed in consolidation for so long, that average is going to be way off. That average is going to be thrown off for every single indicator. So, like I said, this is a mind game. The retail traders that sold in here and had their stop losses up in here are now stopped out. All the retail traders that bought into this have now been stopped out here or here. This candlestick was only to induce the retail trading herd long in the opposite direction from where they were going. And notice how first they induced them short. So now anybody that wants to get on here that already sold, all the retail traders that want to sell again, that were already crushed in this sell, already feel bad. They already lost so much from selling, possibly depending on how much they risked. They've already lost here, so it's going to take a lot of emotional control to actually sell again. You understand? So this happened on just about every JPY pair, across all JPY pairs. Now, really basically the same exact structure. It was the consolidation, induce traders short, and then induce them long, and then reverse the market. And now this is something really, a key important factor happened that did not happen. I don't believe it happened on any other JPY pair. Yet it happened on CHF-JPY, and it basically gave the entire move away. What is that? What do we see here on this chart? This goes here, understanding the weekly structure of the market. We had Sunday, Monday, Tuesday. So, Sunday, what is this? Check it out. There's a gap that has not been filled. On Sunday, the market gapped up and then consolidated off of this gap. It actually came down and filled most of it, but there is still about 5 pips, 4 to 5 pips of leeway, of space down there that needs to be filled. There's a little gap of about 4 pips that needs to be filled down here. That could be millions and millions of dollars of liquidity in this space. And the dealer is not just going to let that sit down there for very long. So, what happened was, we can see he left that open. The dealer left that space open and filled it after that news event occurred. So, why does the weekly structure, why is it so important? Sunday, Monday, Tuesday. Well, we're going with the trend, right? We have the uptrend actually is reversing now, and we can see a downtrend has started, has initiated, and we could see that on CADJPY very clearly. So, watch for spikes to the low or the high. The higher the low of the day, going with the trend, the higher the low of the previous day, or the higher the low of the week or the month. So, this was Sunday. Here's the high of Sunday, Monday, Sunday, Monday, basically the same day. And then come Tuesday, here's the high of Tuesday before the news event. So it threw a wick above the high of the previous day, and then come the news event, hits all the stops in one candlestick that are above the high of the week, right? This is a completely new week, so this is the high of the week. Actually, this would be the high of the week, this wick right here, and all the stop losses would be above that high. All the stop losses of the retail traders that sold. Remember, the consolidation is key. That sold in this point of consolidation. So that candlestick plus the spread was all that was needed. This was about a 30 pip move plus 10 to 15 pips spread on all the JPY pairs. Easy money. And then we actually had about a 65 pip drop on CHF-JPY, CADJPY, GBP-JPY dropped like 100 pips or so. Yeah, 160 pips. But based off of the same exact structure. So, wait for a confirmation. Wait for confirmation. What would have been the confirmation in here? The railroad tracks right here. This is your confirmation. You could have taken it before that because this structure is obviously very evident what was going on here. If you knew that they were hitting the stops here, you could have taken it here like we did in the group chat. ForexAlerts.online, we sent this trade out. And you could have taken that on any of these JPY pairs that offered, for example, USD-JPY, GBP-JPY, Euro-JPY. They all offered basically the same exact structure, the same exact moves. So, GBP-JPY, the same thing. Keep the liquidity in a very tight range, and check this out. The market changeover, the session changeover happened, right? Asian consolidation. Up in here, the spread was being manipulated for every JPY pair because of the Asian session changeover right there that happened. They have the excuse, the dealers have that excuse to manipulate the spread of the market during this time. So any orders, any sell orders that are in here are being placed up here automatically. They're being filled up here. And their stop losses are going to be up in this area. GBP-JPY is very violent, has a very violent spread of like, during news events, it has like a 15 to 20 pip spread on most brokers that have variable spreads. And yeah, the same exact structure that whipsaw, hit the high, hit the low, hit the high, and then drop, make the move. We saw it on every JPY pair. Now, USD-JPY was a little bit different, but they did target the high of the previous day. Here was the high of the previous day. Consolidate, break low for those first pair of news events, and then come back and in one candlestick induce long, and then target any people at the high of the previous day or above that high. So very similar to all of the other JPY moves that happened. Euro JPY, same exact thing. And you'll see this a lot of times. A lot of times during these news events, you can see that a lot of the pairs have a similar structure to them. Here we have Euro JPY actually made that gap, gapped up about 30 pips, and then we can see that gap was filled. So unlike all the other pairs, CHF-JPY kept that gap right there. So that was a dead giveaway again. Knowing that market structure, you guys, knowing market structure is key. Notice that I don't have a single indicator on my chart. I don't care about volume. I don't care about momentum. I don't care about the moving averages. I don't care about any of that. Okay? Everything is based off of the highs and the lows of the day, the week, the month, or the highs and the lows of the previous day. So, as you can see here, the market consolidated off the high of the previous day, and then for the high impact news event actually induced everybody to get in, all the retail traders to get in at the high of the previous day, meanwhile at the same time hitting the stops of any sellers. So it's all this is going on at once. But when you understand it, you'll realize why you don't need indicators and why it's going on, why it's happening, why the consolidation is going on where it's happening, why the market changeover happens when it does. Okay, all of this plays a role in the overall market and how it works. The gaps, the highs and the lows, the consolidation, it's all key, you guys. So, one more time, go with the trend. We saw it. This was a very good, a confirmation here. This trend line was actually a pretty good confirmation as well. We had a hit there to this trend line, just going with that trend. Now, if we have another hit to the trend line like this, then I would maybe suspect, if we have a hit to the trend line like this and then it starts consolidating at this trend line, then I would suspect possibly a break of that trend line. But for now, it looks like a downward. It looks like we're going down in this overall trend right now. So, go with the trend. Watch for the spike to the high or the low. We had the news event, spike to the high of the day and the previous day, and this is also the high of the week. So, very important information right there to take in. All of these, the highs are relevant, okay? Wait for your confirmation. What was the confirmation here? That railroad track right there. On every pair you could have taken it after that railroad track happened. Right there. GBP, JPY, right there. Sold right there, zero drawdown. Sold right here, zero drawdown. Just like we did, I think it was, we had our order, our limit order at 89.2 right here. So that was 3.1 pips of drawdown for a total of 65 pips. Our take profit was hit for 65 pips. You guys, these trades are possible. It's easy to trade high impact news events when you know what's going on, when you understand market structure. So, with that being said, I'd like to thank you guys for tuning in. Thank you guys for watching this video. If you have any more, questions, feel free to join forexcommunity.online. Or if you'd like to take part in our alerts, our free alerts, we sent this bad boy out to forexalerts.online. You can type it into your browser. Alright, I'm going to peace out. If you guys enjoyed this video, give it a thumbs up, subscribe, smash that like button. Thank you guys for tuning in. Peace out.